Hey everyone, me Kevin here, and
Hi, I'm Lauren.
there's me, Lauren. Leave comments. Tell her to make videos again. You gotta make videos again. You hear that?
Yeah.
Yeah. All right. We gotta convince her. Okay. I don't have a lot of time. Quickly though, I want to give you a few, just some things to pay attention to. The most important thing right now, that's in my opinion, something that's actually somewhat bullish on the horizon, follows what the President Bostic of the Federal Reserve, one of the bank presidents, said. And one of the things that he talked about was that he's not convinced that we have to go with that 50 BP hike in September. Then instead we could be going with a 25 BP hike. This has completely changed the rate monitor's futures, and it's affecting treasury yields. More people are feeling more confident right now to move from stocks and dump into bonds because they view that if we don't go with 50 in September, and we go 25 for the rest of the year, we're only going to get to like 2.5 or 2.75 by the end of the year. We'll barely be above neutral. We won't end up getting to 3%. And in other words, markets are thinking, does that potentially mean there could be a ceiling on treasury yields? Let's flee stocks. Let's get into treasury yields for safety right now. That's why we're seeing the 10-year plummet all the way down into like the 2.7 range right now. And we're seeing a lot of pain in stocks because people are like, oh my gosh, after Snap and the complete disaster of Snap, and leading basically all of the online consumer discretionaries to go down. Look at obviously Google, and not just Snap, but Google, Pinterest, Trade Desk, you name it. They're all getting whacked because, I mean, you've even got the Best Buy CEO saying like, yeah, no, we're slowing down. Okay, things are slowing down a lot more than we thought. All these things combined are suggesting that, okay, well, if there's a limit to what the Fed's doing, let's go hide in treasuries, let's get out of stocks while we wait for essentially that sort of consumer discretionary bottom, and we see what happens with consumers. That's leading treasury yields to fall because, again, people buy those, prices goes up, and then the yields come down with it. When prices go up, yields go down, right? This is the opposite of how my courses on building your wealth work down below, where as the price goes up, the yield that you get goes up because you get more value over time as we add content. Remember, there is a code expiring at the end of the month for that, and then we're going to have our largest price increase ever. We did extend that a little bit. There's also a link down below if you want to get 6 now totally free stocks with Webull. They emailed me and they're like, hey, we're doing a special offer right now, 6 totally free stocks with Webull. Use the link down below and you get 6 totally free stocks with Webull. I think the minimum you get is like $32, and then it could be thousands of dollars up to like 10K or something like that. It's really cool, so check that out. But I most importantly just want to say, watch that Fed rate monitor, because the more we see the potential for a ceiling, guess what happens? The more we get evidence that we're not going to get Paul Volckered. Now, I know that my optimism right now might feel misplaced because the market is like on fire, right? I was just adding up. I'm like, I bought some more shares. I'm liking my Q right now, right? Because my quantity of the shares I'm buying is going up, and it's great. And I just closed another couple properties, and I'm just taking the money, I'm just dumping it into this market. I'm like, yes, this is an opportunity. I'm down to like 1.1 in margin too, which is great because then I think one more deal closes and I'm completely out of margin, which I'm super excited about. But anyway, I'm buying. And the reason I'm so optimistic about this Fed path is because even just this discussion of the market now pricing in a lower chance of that 50 BP in September, and the Fed talking about not going 50 in September, what this is telling us is we're not looking at a Paul Volcker. If we were looking at a Paul Volcker situation where inflation's 8%, they're going to raise rates to 9%, you should be so far away from stocks. There's just like basically they're going to go to zero. Like you're going to see 90% declines in like everything, right? Nobody wants a Paul Volcker again. And I actually think the market has gotten too fearful that we're going to get Paul Volcker, that inflation's not going to go down. But if I really believe that, like if the wage price spiral from January continued and we kept seeing inflation continue to go up in addition to core, and we didn't actually start seeing a decline in inflation like we're seeing now with apparel, used cars, computer goods, TVs, and so on and so forth, I would not be in this market. Now, I know I got in a little bit early, but hey, you know what? I think this is a phenomenal opportunity. And what we're seeing in that Fed rate pricing, which you could just type this into Google if you want to see it yourself. Type in investing, because the website's investing.com, and then Fed rate monitor. And then you could look at the probabilities. It'll tell you like what was the probability of a larger rate hike in September last week compared to this week. And it's down substantially. Like the market's really moving on this. And that's why we're seeing treasury yields move. But again, obviously the stock market's moving down because of Snap and the substantial fear that we now have of a much weaker consumer than previously thought, and basically all future guidance is just going to get screwed. So anyway, for me, it's an opportunity. In the short term, though, for any kind of hope we could potentially give you, it's solely just that, hey, you know what? Hopefully, we stay the course. inflation starts going down. June, July, August, we start seeing those reports obviously a month later, and then we get a Fed that says, yeah, you know what? We're good. Like, we actually don't have to keep doing 50s, and we don't have to Volcker. We don't have to go so substantially above neutral. But, do still think the housing market is in for a rough ride towards the end of this year. New home sales came out this morning. Disaster, like down 17%, substantially under expectations. And I'm like, yeah, I tweeted on, which follow me on Twitter if you don't yet already, at RealMeKevin. I'm like, yeah, this is the beginning. This is where it starts. Anyway, I'll come back with another update later. Lauren's getting mad at me. I see her in the mirror over there, and I gotta go. See ya. Bye.